Hey guys, how's it going? It's Andy from Magoo Investing. Happy Monday. In today's video, I'm finally getting around to talking about these stocks that you guys wanted me to talk about. I'm going to be talking about 5 of them today, and I'll probably later this week talk about more of them. So if there is still a stock that you'd like me to go over in a future video, be sure to leave it in the comment section down below, because I love talking about stocks that you're interested in, because it kind of gets away from the stocks, maybe like the 30 or 40 of them that I constantly talk about. So that's what we're going to be doing today. Some big stock market news is that we had another good outcome of some vaccine trials with Moderna, ticker symbol mRNA, similar to what we saw last week with Pfizer. They have a potential vaccine that had around a 95% success. So this is great news going forward. However, I'm not going to be holding my breath that it's going to be around relatively soon. From my time taking all these biochem classes, it takes a long time for these to get approved. And I don't know if I'm just being pessimistic, but I really don't think the vaccine is going to be available until maybe like April at the earliest, and realistically I'm thinking June of next year. So hopefully I'm wrong. Hopefully that happens sooner rather than later, but this is some great news. And so before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. And as I mentioned, be sure to leave any stocks you'd like me to talk about in a future video in the comment section down below. With that out of the way, let's talk about 5 of the stocks that you guys are watching to buy going into November and December of 2020. So the way I picked these stocks is I didn't go through all of them. I wanted to pick a stock that I really believe in, that I think has a lot of upside potential. There's some blue chips that a lot of people are going to be interested in my opinions on them. And then I'm going to wrap up the video with a really cheap stock that has an incredible amount of upside potential. So with that out of the way, let's get started and talk about the first stock, which is going to be Intel, ticker symbol INTC. Currently, Intel is trading for $46.60, and it's down 22% on the year. And so this is one of the largest semiconductor or chip stocks out there. But a lot of the positive news that has come out recently has been around stocks like AMD, which has just surged in price ever since I started investing in the stock market like 2 years ago. I remember when it was so cheap, and it has just skyrocketed in price. And Intel has not done the same thing. So their last earnings report was not great. And as a result of that earnings, the stock fell around 10%. And so the company did beat revenue expectations, and they met their earnings per share estimates, even though it was a 22% drop from a year ago. So they met the expectations, but it was still a year-over-year drop. Their cloud revenue increased by 15%, but their enterprise and government business shrank by 47%. After the past 2 quarters, both had 30% increases in their growth. So this is a huge contraction for that business. Intel sells chip for many of the cloud companies, and during a pandemic where uncertainty for revenue is prevalent, many of these companies aren't going to be upgrading right now, and most of those upgrades aren't done on a linear basis. It's a lot of they upgrade, they wait a bit, and then they upgrade again. And in a time like this, when revenue isn't guaranteed for these companies, it makes a lot of sense that maybe some of them aren't focusing on upgrades at this point. And so that has really hurt Intel in their last earnings report. So that wasn't a huge red flag to me. There are some interesting news. Intel sold its memory business to a South Korean chip maker for $9 billion after they only had around 9% of that market. So it is interesting. They do have a lot more cash based off of the sale, but you don't love seeing a company sell off part of its business, but it's fine. Looking at the revenue sources, their largest comes from their client computing and data centers, while memory section wasn't as large. So while it is kind of a bummer to sell off part of your business, I've always talked on this channel that I want to invest in companies that do a couple things really well. And if they weren't doing super well with this business, only taking up around 9% of the market, I'm okay with them selling that off personally. And so during that last earnings report, Intel discussed that the pandemic will likely drive weaker demand to their data centers, and there will be a moderate increase in demand for their cloud services. So the reason I really like Intel going forward comes from it being a great value play. Usually when stocks are having a tough time, you see their PE ratio increase. It's usually because while the price usually drops a little bit, the earnings are normally the ones that drop significantly. And since it's price over earnings, the drop in earnings makes the PE ratio skyrocket. But we have not really seen that with Intel. When you look at their PE ratio over time, this is the lowest we've seen their PE ratio in a long time, currently sitting just below 9. And so when you compare this to some of their main competitors with NVIDIA, ticker symbol NVDA, they have a PE ratio of 86, and AMD has a PE ratio of 110. So while they have not had a great time right now, this is one of the largest semi stocks out there, and seeing their PE ratio be so low is really attractive to me. And then when we hop on the computer right now, I'm going to show you what I see on the charts that makes me even more bullish on Intel overall. Okay, so looking at Intel, ticker symbol INTC, I see a couple interesting things that made me feel like this could be a potential buy. So the first thing, I had this upward channel, I guess it's just an upward trend that I had charted for a long time. And right after the last earnings report, when it gapped down, it came down to this point. And I remember texting my dad saying, this might be a good buy if it bounces off of here. But the important thing is you got to wait for confirmation. And it got to that point and then opened the next day and just fell and has gone down since then. But I had this set as an alert and it popped off because I had this charted as a very nice support. It had been tested once, twice, 3 times, 4, 5, 6. Now we're at number 7. So this has been a very well-respected support. And so when we come in here, it dropped down off of here, it's been pushing up, and we were getting to the point where it has been respecting this. And so if you look at the long-term potential of the company, obviously some of the recent stuff with the earnings reports, how it's being outperformed by stuff like AMD, doesn't look great. But when you look at it as a value perspective, based off of this great buying opportunity from the support and the relatively low, not even relatively, the incredibly low PE ratio compared to its main competitors, for a long-term position, I think this is very attractive. If you're looking at some other indicators, we're still waiting for a bit for the Golden Cross. The 200-day is still significantly higher than where it is right now. And so some of the entry points I could consider buying in right now. Another thing you could be waiting for is for it to break above the 50-day moving average, which gives it enough time for the price action to bring it down to the current price. And then with any upward momentum, it could be a great buying opportunity. So based off of the charts, I think Intel looks great right now. Okay, so now that I've discussed why I like Intel, let me know how you feel about Intel, ticker symbol INTC, in the comment section down below. The next stock I want to talk about is probably one of the only Chinese stocks I would ever consider owning at this point, which is going to be Alibaba, ticker symbol BABA. Currently, Alibaba is trading for $260 and it's up 23% on the year. And so Alibaba is basically, for those who don't know, it's basically China's Amazon. And so in their last earnings report, they saw a revenue growth of 30% in the last quarter. And similar to Amazon, Alibaba has a cloud section of their business that saw a revenue increase of 60%. For people that have been following Amazon, which is, spoiler, going to be the next stock I talk about on this list, some of the biggest growth from the company comes from their Amazon Web Services, which is the acronym AWS. And so far, looking at Alibaba, it's still on the early side of that business. And so right now they're still operating at a loss, but it's expected to be profitable within the next calendar year. But seeing how profitable Microsoft's Azure and Amazon's AWS has been, this could be great for Alibaba's future, and the fact that they've already been seeing a 60% increase makes me feel very bullish on them overall. Looking at their overall revenue, I'll put that up. It's pretty impressive. They've only had 1 quarter of revenue shrinkage, which was back in 2015. And the past 2 quarters, they've seen 30% increases both quarters and revenue year over year. So this is a company that's massive, and they're continuing to grow at a crazy rate. Alibaba does have a 33% stake in the company Ant that was supposed to go IPO recently on 2 different stock exchanges. However, there were some problems and it was postponed by Chinese regulators, which is not something I would ever expect to say. As part of the problems that I've had with Chinese stocks in the past is that I don't exactly trust them when it comes to listing on the New York Stock Exchange, because we have seen some problems with stuff like a Luckin Coffee. But Ant is a major opportunity for Alibaba, considering that they do own around 33% of the company. And so Ant runs the business called Alipay, which is one of China's most popular mobile payment systems that was launched back in 2004 and currently has 900 million users, which is just a crazy amount of customers. And so this is going to be a big opportunity for Alibaba when it does eventually go public. And so that'll be interesting to watch. The fundamentals look really great for a company like Alibaba, and while I'm normally hesitant to buy a Chinese stock because of some of the problems with transparency that we've seen in the past, Alibaba is large enough where I feel comfortable. And with that out of the way, let's hop on the computer and I'll talk about what I see with the charts for ticker symbol BABA. So here we are looking at Alibaba, ticker symbol BABA. As you can see, it has done very well for the past couple years. I had this upward trend going for a while, and then back in April of this year, it's just skyrocketed. And so that's not exactly something to play from now, but some of the things that I'm looking at is we had this incredible run up in 2020, and it's been falling for the past couple, I guess that's been a couple of weeks at this point. And so one of the places that I would look for to drop to would be potentially this area right here, so I'll chart that. But I think the more realistic support is going to be this 200-day moving average. This is such a large and well-respected company that the 200-day moving average is often respected. And so we're getting to that point where it could meet around the maybe like the 245 area. And so it has been falling recently, But I think this could be a very good buying opportunity. This is one of the only Chinese companies that I would consider buying based off of how well respected it is, the incredible sales that they have, and just how influential they are in China. So based off of this, there's not a really set in stone buying opportunity like what I pointed out with Intel, but I think the 200-day moving average, which is this yellow line, could be respected as a decent support and could bounce there. And if it doesn't, I would be looking to buy in around the 230 area. I think this is a company that has fantastic long-term potential. The charts are not speaking to me in the same way as some of these other stocks are. So after talking from China's Amazon, let's actually talk about Amazon, ticker symbol AMZN. Currently, Amazon is trading for $3,120, and it's up 69% on the year. I'll just put up the revenue history for Amazon. I really don't know what else to say at this point. It's just beautiful. It's so impressive how they continue to grow at this crazy pace that I didn't really think was possible. I watched their last earnings report live, just kind of wanted to see how the stock was going to react to it. And when the numbers came out, I yelled out loud. I was like, how do they keep beating the expectations by so much? And from that report, they saw net sales increase by 37% year over year, and their earnings beat expectations by 192%. So for a company as large as Amazon, beating by 192% is crazy. They've been investing in themselves significantly and spent almost $10 billion in expanding their business. They added 350,000 new jobs in the last 4 months to bring their total to 1.1 million full-time employees. But the section that I was really watching, similar to how I talked about why I'm really attracted to Alibaba's cloud area, is that I was watching Amazon Web Services, or AWS, that continues to grow at a crazy rate. It grew by 29% in the past quarter, which seems great until I put up the graphic of its revenue growth, and it's actually the lowest revenue growth that we've seen from AWS since quarter one of 2017. So AWS continues to increase in size and is just so profitable for the company. Subscriptions for Amazon Prime increased by 33%, currently having 150 million paid members, which is just a crazy amount to think about. Amazon isn't going to be releasing their numbers from Prime Day until the next earnings report, but they have called it on their website the 2 biggest days ever for small and medium businesses. They usually just have a crazy number of sales. That's actually where I bought this laptop from a full year ago, and I'm really excited to see the numbers that come out from that. But with that out of the way, Amazon, the fundamentals are absolutely beautiful. They keep continuing to grow at this crazy pace. And now let's hop on the computer and I'll talk about what I see with the technicals for Amazon, ticker symbol AMZN. Okay, looking at Amazon, ticker symbol AMZN, you're kind of seeing similar things to Alibaba. And what I mean by that is it was doing pretty well for a long time, and then early in April this year, just kind of took off when the pandemic really got going. But unlike Alibaba, it's been able to hold its own towards the top, and it's kind of gone horizontal. And so for a swing trader, this could be a very interesting area to buy in. If it comes down to this 2950 area, this seems like a pretty solid support. Another thing similar to Alibaba is if it comes down and tries this 200-day moving average, that could be a great buying opportunity as well. But with something like Amazon, I had never really expected to fall as far as I would really want it to. Also, the incredibly high price, not super attractive to me. But based off the technicals of this buy, if it ever came down to this area, the lower area, the 2000 area would be a great buying opportunity. Unfortunately, it is $1,000 more expensive than that right now. So that's unrealistic for it to get back to that level. But yeah, something I'd be watching is coming down to this 2950 area. And then I'd also be watching for it to respect the 200-day moving average if it gets there. At this point, it's been pretty horizontal. So I think it's very possible that the 200-day moving average could come up to that level and it might be able to bounce off of that. So that's what I'm going to be watching with Amazon. So next up, let's talk about Microsoft, ticker symbol MSFT. Currently, Microsoft is trading for $217, and it's up 38% on the year. Microsoft last earnings report was solid, and they mainly had great numbers from their cloud businesses. So you've been seeing a trend as a lot of the stay-at-home stuff has happened. The cloud servicing has been a huge part of these businesses. Sales jumped 12% year over year, and Azure's revenue increased by 48%. And it's crazy to think that a 48% increase for a business this large is considered a miss. But the analysts were expecting an increase of 50% in revenue, but 48%, it's still incredible. So here's the breakdown from the revenue sources for Microsoft. As you can see, they have a lot of different areas that make them a lot of money, but the cloud services have become the most profitable for them. Gaming should be getting a boost from the next generation of consoles that were just released. However, the major growth has been coming from Azure and their cloud businesses. So gaming should get a little bit of a boost with the new cycle, but I don't expect it to be a deal breaker or the main reason why anyone should consider to buy this stock. Microsoft is a stock that I own, and I'm a proud shareholder. And just looking at the numbers, this is a company that I'll probably buy and hold forever. Anytime you see a relatively decent drop in price, I think I will be snatching up as many shares as I can afford at that point. But the stock price has just gone up continually. The company announced an increase in their dividend payment back in September that does go ex-dividend in just a couple of days on the 18th. And while it's a smaller dividend yield of around 1%, when you add that to the almost 40% that it's up in 2020, you get a fantastic stock to own for a long-term portfolio. I don't really have anything else to say about Microsoft. It's an incredible company, and it'll be part of my portfolio forever. But let's hop on over to the computer, and I'll talk about what I see on the charts from Microsoft, ticker symbol MSFT. Okay, here we are looking at Microsoft. As you can see, there's nothing charted at this point, because when a stock just goes up, there's not really much to chart on the technical side. There's no real set in stone support that I would be watching. You could maybe call this, I wouldn't even draw that. Maybe I'll just call it as a 200. Another thing that I have not talked about a lot recently is that even numbers, stuff like $100, $200, $300, often respected as a support or a resistance, just because it's a very easy way when people are typing in stop losses, stuff that triggers automatically. Having just an even number is a lot more common. So this is often respected as a support or a resistance. And so if it ever comes down to the 200 level, I consider that a buying opportunity. But if you just see this track record for Microsoft, it's just insane. And so not a lot of technicals to do here. It has a track record to make me warrant saying I would be happy to buy this anytime it drops a couple percent. This is a company that's part of my portfolio right now, and anytime I get a chance to buy it at a discount, I would happily do that. I bought, let's see, this is back in March, and I think I bought around here, around April 1st. So I have a significant profit going so far in 2020, and anytime I can add to this position, I will happily do that. So the last stock I want to talk about today is going to be Nokia, ticker symbol NOK. Currently Nokia is trading for $3.87, and it's up only 4% on the year. So this is one of the cheapest stocks that I've talked about in a long time, but it does have a lot of upside potential just based off of 5G. The company is in a critical spot going into 5G, and they recently just announced a new CEO. From their last earnings report, it was not great as the company missed on top and bottom lines. Net sales dropped 7%, and sales dropped in 4 out of 6 of their major regions. The company announced that it's working with NASA to put 4G on the moon, and when I read that, I was like, why? Like, obviously they did get a contract that was worth $14 million, and it's to help with NASA's goal by 2028 of building a lunar base. But for a company that's trying to focus on 5G, I feel like you should be putting all of your efforts into that. And while $14 million is a decent amount for a contract, I think 5G has a lot more potential for them. The stock price did not really seem to care about that news. From the earnings report, the company cut their profit outlook for the next couple quarters, and the stock has kind of been all over the place. The company did pause its dividend around a year ago to focus on investing in 5G, and they did put a stipulation in that release saying that once the company reached $2.4 billion in cash, they would be starting the dividend up again. And at this point, they're currently sitting on $2.2 billion, so it's pretty close. Looking at 5G, Nokia isn't the leader in this sector at this point. When I look at probably the best 5G stock, in my opinion, I'll look at competitor Ericsson, which is ticker symbol ERIC. And while Nokia has seen a drop in sales of 7% in the last quarter, Ericsson saw a 7% increase. And I just think that they're better set up to take advantage of 5G at this point. How do I feel about Nokia at this point? Kind of up and down. It's never a good idea when my two bullish cases for a company comes off of stuff that doesn't really have to do with their main business. 5G seems like it could work out really well for them, but at this point it seems very risky for me. So the two bullish cases that I see for Nokia is one is when it establishes its dividend back. What this will do is it'll lower your average price while you kind of deal with some of the chop of going into 5G. 5G isn't something where, when it starts, it's going to skyrocket in price. It's going to be a long-term positive outlook for the company if they do well. And having the dividend will give you a little bit more stability to try to last through some of this chop. And then the other bullish case that I see is that we've been seeing a lot of rumors about a potential acquisition from something like a Microsoft. This gives you a lot of hope going forward. However, I never like betting on the potential of an acquisition because a lot of times you hear these rumors, the stock price goes up, and then it never actually comes through. So until it actually happens, I don't feel that great about an acquisition potential. But let's hop on over to the charts and I'll talk about what I see for the technical analysis based off of Nokia. Okay, so here is the mess of a chart when we talk about Nokia, ticker symbol NOK. Some of the things I do point out is a very choppy stock. This is kind of similar to when we talked about Nintendo last week, NTDOY. it just doesn't move as fluid as something like an American company. And the main reason behind that is a lot of the trading gets done in the European markets, and so the movement's just not as fluid. It's not as attractive to trade. But as you can see, Nokia has just kind of been all over the place. I had this charted as a downward channel for a long time, broke out of that, and now we just recently had a death cross, which is when the 50-day moving average drops below the 200. And so it's looking like it's trying to get above that level. Probably the $4 area is going to act as a resistance, but just the trajectory of the company has not been looking great. And since it's so choppy of a price movement, I would not really buy the stock based off of the technicals. And that's just how I feel about that. So those were the 5 stocks that you guys asked me to talk about in today's video. And if I missed your stock, I'll probably get to it by the end of next week. And if there's a stock you'd like me to go over in a future video, let me know in the comment section down below. Thanks for watching. I appreciate all support, and I will see you tomorrow.